Right now to this, for the first time this decade, Saudi Arabia's public investment fund saw a drop in its assets under management. This is the market value of all of PIF's investments. According to its annual asset report, the value shrank by about $10 billion last year. It now sits at about $900 billion. But why should you care? Why should I care? Well, Saudi Arabia is a major investor in the U.S. economy, including in companies like SpaceX, Uber, and Electronic Arts. Kelsey Warmer is a reporter for Semafor Gulf, and she joins us now from Abu Dhabi, a former home of mine. Kelsey, good morning and welcome. Give our viewers some insight into why this dip is happening. Surely it's not just for one simple reason, but what's at play here?
Sure. So, Errol, hi, good to see you. What we've been seeing over the last decade from Gulf sovereign wealth funds generally is just massive growth, billions of dollars each year, meteoric kind of rises. And so this PIF drop was surprising if you're not paying attention, I suppose. They blamed it on market conditions, performance of its local stock exchange, the Tadawul. But also PIF is fundamentally unique. It has a dual mission. It is both investing its oil wealth into ensuring future prosperity of generations, which is generally the mandate of sovereign wealth funds like these, but also it's the engine for its economic diversification shift. So its ability to remove its dependence on oil and build local economies around tourism, around aviation, gaming, as you mentioned, is a big play. So what we're really seeing is this domestic effort and how long-term and expensive it's going to be, start to meet the realities of its annual reports. And it's going to shift its shape on the global stage too, for sure.
And let's talk a bit about that. You know, I mentioned that they invest heavily in the U.S. economy. So if Saudi Arabia is slightly pulling back, if this fund is dipping by, a certain percent over the past decade, what might that mean for Americans who could be impacted?
Sure. I mean, PIF has made some pretty big public cannonballs in recent years. We've seen Live Golf, for example, the kind of challenger brand to PGA. Gaming company, as you mentioned, EA, largest buyout in history. It's stepping back from Live Golf. It's stepping back in a way on some of its larger domestic mega projects like NEOM, putting those on the back burner. It's getting really practical at home around discipline for its homegrown companies like Riyadh Air. We're going to see it kind of look inward more and really invite the global community to think about taking a look at the kingdom and investing into the kingdom. So rather than this outward play that we've been seeing in recent years, the next 5 years, I think, are really, and not just I think, it is reflected in its stated strategy, is to look inward and try to draw foreign investment.
And what are you watching for closely as we look at what may come next? Is this shrinkage something to be concerned about, I wonder, or might there be market opportunities here?
I mean, it's certainly not like an economic bellwether. I think for people who are watching the Gulf closely, it's like one of the most fascinating kind of economic human experiments in the world right now. It's an existential question of, will countries like Saudi Arabia be able to diversify away from oil amid the energy transition and create economies that can support them after the last barrel of oil. So looking at that, these are high wire acts. These are big, big investments into renewables, into tourism, into big kind of exciting projects. But it'll be inward. And we're all kind of seeing if they can pull it off.
Yeah, really fascinating to watch this unfold as you speak to us from a place that also is doing similar things, trying to figure out ways to diversify its economy. Kelsey, thank you so much for joining us from Abu Dhabi this morning.
Thank you, Errol.